So much for having us. I'm humbled to be mentioned in the same sentence as Scott Minerd, who's traditionally a bond person, fixed income people. And as you know, fixed income people are way smarter than us equity people. So listen, I like the old days of when the Fed members just dissented. I think they're using the bully pulpit now more than ever, meaning the social network, to come out and talk about what they really feel. And although Bullard did dissent the last meeting, you could be seeing more dissension going forward. But bottom line, the bond market is what you should be watching. The bond market's done a wonderful job and has already done the Fed's job for it. And so I'm with Mr. Minerd. I think there's a very good chance the 10-year has likely topped, and you're going to see a pretty nice rally in prices here, which would build confidence, I think, for the overall stock market.
So you think that the stock market, I mean, how much you think the stock market can really go up in the near term, right? We're not suggesting that it's just going to go unabated higher. There are still legitimate risks. I mean, news can move the markets in a flash. If anything comes out of Ukraine, Russia, who knows what other hawkish comments you may get out of the Fed. All that's going to influence.
Absolutely. And I'll remind people that when we published our year ahead piece for 2022 back in November of 2021, we said 2022 was going to be the year of the second derivative. That's a fancy way of saying less positive returns, less positive earnings growth, more volatile returns. All of that has happened. We obviously didn't know about the war in Ukraine. You and I have spoken several times before that we continue to believe that the market is being a little bit laissez-faire with respect to what's going on in Ukraine and Russia. Be that as it may, if and when we have some sort of a positive resolve there, the markets are going to be up 3 to 5% on that day, number one. Number two, and Powell was very clear about this during his last press conference following the meeting, that the Fed's base case was that inflation was going to be peaking late in the first quarter. And so we get a positive resolve to the war, we can move on. Now, I do think that where the first quarter earnings are going to be the supply chain blame game. If you take a look at fourth quarter numbers, they're up over 4%. They've improved 4 percentage points since the beginning of the year. And overall 2022 numbers are up 2% since the beginning of the year. So I think that numbers are going to be better the second half of the year than people think. I think the market could be volatile here as we try to find a range in bonds. This is all about stock picking, all about fundamentals, all about themes, and buying management teams and longer term kind of success running those companies.